Hey guys, welcome back to this channel. My name is Ronnie. I'll be your host as always. In today's video, I'm going to talk about how can you pay your mortgage faster. So depending on the loan structure, I'll give you an example of this. So there's a lot of things that I've seen so far in social media. You can pay off your mortgage within 7 years, 10 years, half of the time frame and whatnot. It works out to be it's only a couple of different structure that you can do it. So first of all, if you have, example would be a 15-year mortgage instead of a 30-year mortgage, your repayment is going to be a lot lower compared to a 30-year mortgage. So that's one. The other one would be making additional repayment. Some product out there some mortgage product out there, it will cost you if you pay additional repayment on your mortgage, because the concept of the bank obviously trying to maximize their profit. In order for them to maximize the profit, obviously extend and stretch as long as possible when it comes to your mortgage repayment. Hence why at the current stage, while this is being recorded, average mortgage these days is roughly about 30 years. Now, just because it's lower amount if you stretch your mortgage over 30 years, is it a good idea? No, it's not a good idea. So if you can, coming from experience that I had a 30-year mortgage, I try to polish that as quickly as possible. Because a 30-year mortgage is a 30-year mortgage. It takes 30 years to pay it off if you just do the bare minimum. Now, if you are already have a 30 years mortgage, what do you do in order for you to pay that off a little bit more quicker? Contact your lender at the current stage and ask them, if I make additional repayment, would I be penalized? Some do, some don't. One of our mortgage account, I have a maximum of paying off additional $5,000 per year. Now I take advantage of that and actually pay that additional $5,000 per year. That's just to reduce my, long term in terms of my term with them. And so that's one. The other one, it would also be, instead of having a 30-year mortgage to maximize to minimize your repayment, let's say, I change that into, if you can, don't borrow 30 years, borrow only for 15 years, maybe 20 years if you have to. But if you can, obviously minimize that debt as quickly as possible, because if you have a debt for that long, sometimes it can be a burden. Some days I felt like I don't want to be with them. I don't want to pay this mortgage repayment. Circumstances change as well. For example, maybe from a dual income between your wife or your partner anyway, and then to change that into a single income, that would be putting a lot of strain on your cash flow, let's say. Having a 15-year mortgage, it might be, it's a lot shorter in a sense instead of a 30-year mortgage. Another one would be change your repayment. Most people, when you open up a mortgage, you do a monthly repayment. Now, the interest that is being calculated with most mortgages is actually being calculated on a daily basis. So I've changed mine into a weekly basis. So if you receive a payment every week, then I would suggest just split that, whatever your repayment is, split that, times it by 12 because it's 12 months, and then divide it by 52. That way you work it out how much is your weekly repayment supposed to be. We did that for all of our loan. Now the other one would be, throw in a spare change, whatever you can. Maybe some days that you're earning an extra income from your side hustle, throw that in there, as long as it does not exceed your cap level. So example with my one, I just put a lump sum of $5,000 and that's it for the year. But for some, I've seen a mortgage repayment that you can actually pull additional I think it's up to $45,000 per year. I mean, if you can do that, that would be good. That way you can make making repayment on that particular property as quickly as possible. Then there's another one. Some people leveraging debt. That's what we did on one of our property. Is it a good idea? No. Is it recommended? Probably not, especially if you don't know what you're doing, because that's what I did. I didn't know what I was doing. But coming from experience, leveraging debt is not a good idea, because sometimes you get emotionally invested to it. My wife bought an investment property, and with that investment property, she was leveraging debt with the intention that it's going to go up in value and pay it off. So that's another strategy that I use. So we bought a property, hold it for 10 years or something. We were paying, let's say, principal and interest repayment. Yes, it's going down. However, the value of the property goes higher. So let's say we bought the property at 400. Now it's valued at 6. We sold off that property. We were cashing in roughly about 200. And then there's obviously administration costs, taxes involved as well, depending on your structure. And then with that 200, we didn't spend any money on that. We actually put that through to another of our investment property. Hence why now I've only got roughly about $60,000 on one of our investment property. So yeah, there's a lot of different ways, but the very bare minimum, if you can't do that, if you can't pay off like you say, if you don't leverage your debt, let's say, then I would say I go with the weekly repayment is the bare minimum instead of monthly payment. And then if you already have a 30-year mortgage, then focus on that. How can you increase your income? How can you pay off another loan? Can you pay it off a little bit more quickly? And is there a penalty when you're actually paying it off quickly? Because I know in my product anyway, like in my mortgage, because I fix the repayment, so that way I know how much it costs me every week, and then because of that, I was able to figure out how much of my weekly repayment is going to be, and from then on, we figure out what will be the best outcome. So if you can fluctuate, then good. I understand that every month it might be a little bit different, but I would rather have the same dollar figure every single week. That way it won't fluctuate, because your income, if you're like, let's say, an employee base, your income bound to be the same no matter what, week to week. But if you're like self-employed, your income is bound to be fluctuating week to week or so, and sometimes that could caught you in that aspect. So yeah, the other one would be hence why I show you guys, I guess, my using eBay side hustle. What we do with that side hustle income, we don't really spend it. We just go straight to the mortgage. Every time we earn an income from that, we either pay for our lifestyle or straight to any of the bills that is required. And that's the beauty thing about having eBay side hustle in a sense, because I know for sure every time I pack something or send it to the post office, or if I have to send it somewhere, that means that's a profit. And every time I have that profit, in the back of my mind is, okay, this goes towards owning my dream home, let's say. That's what we do with our profit. We either reinvest it on the eBay, or if not, put it on Spaceship that you can earn up to about, well, at the moment Spaceship alone is averaging roughly about 20% a year. So, or pay off the mortgage that is at about 4% or something, 4 or 3%, somewhere around there. So the concept of it is I'll try to do whatever it takes in order for me to not to have to holding hand with the bank. Instead of 30 years, I want to pay it off as quickly as possible. less debt that you have, the better it is for you, and the easier, I guess, makes life is a lot more easier if you don't have any debt. So anyway, hopefully this gives you an understanding anyway how I go about doing making my mortgage repayment a little bit more faster. Changing it in a weekly, that'll be the best thing that you can do. Don't forget to subscribe, comment, guys, and I'll see you guys on the next video. Bye.